Good afternoon, everyone. We're going to get started in about 2 minutes, so just hang tight and we'll be with you shortly. Thank you. Okay, we're going to go ahead and get started today. Hi, everyone. It's good to see you here back for another webinar with Mass Cultural Council. My name is Michael Ibrahim, Program Manager with the Cultural Investment Portfolio, and we're excited to do our second part of financial planning with our friends from the Nonprofit Finance Fund. This workshop is part of the Recover, Rebuild, and Renew efforts to help organizations come back from COVID-19. As you probably guessed already, we've been doing 2 free webinars every Tuesday and Thursday in the areas of legal issues, human resources, advocacy, financial management, and board governance. Joining us today is Christine Alvarez from the Nonprofit Finance Fund. We're going to get started in just a moment, but I wanted to go over a few ground rules. If you wanted to go say hi in the chat, maybe just say your name and what organization you represent, that'd be just great to see who's here. This session does have automatic captioning. Auto-generated captions are provided on all Mass Cultural Council Zoom meetings and webinars. If you need additional accommodations to ensure your participation in future sessions, just let us know when you register. If this is distracting, you can always minimize this by clicking hide subtitles in the closed captioning options at the bottom of Zoom. We will have time for questions and answers, and with the financial planning, we've been getting a lot of questions coming in, so don't be afraid to ask your financial questions throughout the presentation today. Christine will be answering them as we go along. Don't wait to the very end. Keep us going throughout the presentation. Please use the Q&A function to ask a question. That way we can keep it organized and we can save the chat for links that'll be coming up. My colleague Cheyenne Cohn-Postel is going to be joining us in a minute with some links for today. But if ask a question in the Q&A and we'll be happy to answer them as we go along. You can also choose to be anonymous in the Q&A if you want to do that as well. The session is being recorded and will be available on the Mass Cultural Council YouTube channel later this week. We have a 1-hour runtime for today, and that includes questions and answers. And with that, I'd love to turn it over to Christine.
Great. Thank you so much, Michael. It's wonderful to see you again. Thanks for having us back. Good afternoon, everyone. And thank you for carving out time today. Appreciate the opportunity to spend the next, about 55 minutes or so with you all. I'm also acknowledging that I think we're all on Eastern Standard Time, most of us anyway. And so likely just entering into this space from different parts of our day. And so whether you're coming, straight from like a quick lunch break or straight from another Zoom meeting or helping kids with virtual schooling, like I'm often doing around this time, just wanted to just take a moment to help ground us and move us into our learning space. So I'll just very briefly invite you to take one deep breath with me. And I'm sure, not everyone did it necessarily, which is totally okay. And now, but just to help us slow down even further, we'll invite you to take another deep breath. And this time, just really focus on slowing down the pace of your breath in and out. Well, fantastic. I just want to offer a moment before we dive into our content today, just to reflect and acknowledge the land that we're joining from individually and collectively. It's always really interesting to do this in a virtual setting. And even though we're not all together in a physical space, I still think it's really important to acknowledge the history of the land that we're each joining from and to acknowledge the history of its people. And I know most of you on the phone are joining from Massachusetts, New England. Today, I happen to be joining from Pennsylvania and joining from land that's ceded and stolen from the Lenni Lenape people. And so I invite you, if you don't know the land that you're joining from, you can find the native land that you're on by clicking on the link that's shown up on screen. You can enter in your address and it will provide more information. And if you're comfortable, I just invite you to share in the chat the territory and history that you're joining from. And while we have some folks enter their chat, I just wanted to spend a moment. We do this just for a few reasons, to recognize the story that we're inside of, and to just create a little more spaciousness, especially in the conversation that we're going to have today, as we reflect on this past year and just entering into this conversation. This just allows us to be reminded about the expanded timeline that we're all on. I think a lot of us are coming from organizations that have missions that are just much longer and deeper than this past year. And so even though a lot of us may have found ourselves reacting to the pandemic, now going into the second year of what may feel uncertain, our missions, they will continue over time. And so in some way, when we drill down deep enough, our mission is connected in some way, to the dream of creating a vibrant and equitable world. And there is so much work beyond the land acknowledgement. And for us, this is just one step to beginning a process for restoring justice and balance. So thank you for just taking that moment to reflect. Just by way of very brief background, I know I see several folks, that look familiar in the participant list. If you don't know NFF, just really briefly, for the last 40 years, we've been working with organizational leaders navigate their financial needs. And we do that through a range of loans and financial consulting. Even though we were founded in 1980 with literally the mission to address access issues for 501c3 organizations that have been shut out and excluded from traditional banking sources, it's really just been in the last 5 years that NFF has begun to be more explicitly responsible, for just supporting a more just and vibrant society. And so we continue to provide loans to the sector, financial consulting for organizations and grant makers on the use and deployment of funds. And whenever it's possible, we step forward just to elevate what we're learning on in the sector about what's working, what's not, so that we can help promote and advance just new funding and financing practices. A lot of times, we are most familiar with the budget and the profit and loss statement in our management and leadership of organizations. And so just to dive right into our learning goals, some of you may have joined Robert Kagan, my colleague, who walked through the first half of this particular session that focused on the income statement and also just how to maximize the income statement for planning for the future. Today's session picks up on that thread, and we're going to just shift gears and focus our attention on the balance sheet. It is this kind of financial report that is way less popular as compared to the income statement and profit and loss statement. And yet it contains a vast wealth of information and data that helps us better inform our planning for our organization's longer term needs. So today's learning goals are really about focusing first on building a deeper muscle, like as it relates to looking at our assets, our liabilities, our net assets, and just getting more comfortable in understanding how each of these components can influence our longer term budgeting goals. In just a moment, we will launch a poll just to gauge where some of you may be in this process already. But we're going to spend some time just clarifying our financial position and our capacity to take on risk by using the balance sheet. So part of that will be about assessing the liquidity or the kind of safety net of our organization. And then lastly, by doing the first two parts of this agenda, we'll begin to lift up key budgeting practices that really address more long-term needs. So those items that typically don't show up in our more standard P&L or budget. And so our hope in terms of what you'll walk away with by the end of this session is that you'll be able to review your organization's financial reports. Today is a focus on balance sheets so that you're just better aware of not just the financial picture that you and your internal team hold and are clear on, but so that you're also aware of what kind of financial picture is being communicated to the outside world. And why that matters is that I think within today's context, more and more we're finding just the need for us as organizational leaders being able to own without apology, just the financial story that's behind our numbers so that we can tell the outside world with confidence just what are our needs and what our story has been. And later in the series, we will be having a session devoted, primarily to financial storytelling, but this is part of that thread and with a specific look on balance sheet. And so that we can pace today's content appropriately within this virtual space, I'm going to ask Michael for help in just launching the first poll. And this particular question is just asking us to understand a little bit more about your own familiarity with the balance sheet. So if you could just take a moment, the question is really about like just what statement, among the following just best describes your familiarity with the balance sheet, or what most closely, characterizes your comfort level. So we'll just give that just a moment. Okay. I think we have just about 10 more seconds before we'll close the poll. And it is May the 4th, so happy Star Wars Day, to all of you Star Wars fans. Had to get that in after just, talking with my daughters. Okay, I think we have actually a pretty great critical mass. And so let's go ahead and show the poll. And so it looks like, so the majority of folks, we have about, let me start from top to bottom. So about 21%, showing just little familiarity or not quite sure what to look for. The vast majority of you have some familiarity in that you are looking for certain financial metrics. So that's helpful to know. And then the last 21%, you do some level of just like review of the balance sheet with some frequency looking for certain financial metrics. So thank you for doing that. It helps us just understand just, so we're sort of where to shift some of the pacing in all of this. So thank you for that. I think, as I said, the balance sheet, it is this kind of like statement that's the less popular of, as compared to the budget. And so I think, to really make this conversation live, I will look forward to the questions that you all may have. So we certainly have experience and a perspective to share from NFF. And this is a really great opportunity as I look at, who's in the virtual room, would just ask, and as a reminder, ask you to contribute to this learning experience. And so if you have a response to something, you can certainly put that in the chat. If you have a question, you can certainly put in the Q&A, just acknowledging, that we're all in different places, but certainly here in this really unique space as peers. And so just a reminder, as an open invitation that you all, certainly weigh in, as feels good for you and helpful, and an open invitation, to just take care of yourselves. Been stuck in these little Zoom boxes for the better part of a year, and so do take a break, stretch, do yoga, whatever you need, to take care. And I think it's helpful as we shift into the balance sheet. Just as a quick reminder, this is a visual that we have returned to over the course of our last few webinars on financial management. So much of our work at NFF is specifically about supporting organizations build its financial strength. And when we think about financial strength, the first thing that we tend to look at is the business model of an organization, which Robert you spent a lot of time on. Just like, how do we really unpack how we generate our revenue and our money, and then really taking a look at whether we bring enough revenue to not just cover our costs, such as pay our team, pay our occupancy, and rent, but also so that we're generating some level of surplus, and ideally that it would occur on a consistent basis, which I know is easier said than done, so that we can build the balance sheet, which is on the right hand side, or the capital structure. Do we have enough cash on hand so that we can weather unforeseen events, like a pandemic, sort of like a delayed contract or change in our revenue sources. And so this flow, what's represented up here, admittedly, it's the ideal. And right now, I'll acknowledge that this may not reflect where all of us are right in this moment. And it is something, as we unpack the balance sheet, that we can just lift up, like places where we can work towards this over time. That last element on one-time investments, that's just acknowledging that if we launch a new program or acquire a facility, or some major one-time event, we will also need a one-time infusion of cash that we integrate into the flow of our organizations. And so business model, is like quick hand, the results of, our year over year operations. When it's healthy, we're kicking off surpluses, different from the capital structure, which is more of a snapshot in time of our overall health. And so we'll talk a lot about just the terminology around capitalization, and how it's really about like ensuring that our resources are aligned with the impact that we want, among our communities and the people that we serve. So we will unpack this further. I'm just going to move this slightly out of the way. There we go. So in terms of the architecture of financial reports, we focus on just this connection of the income statement and balance sheet. And this is true, for both audited statements as well as internally generated statements that we're running, within our own accounting systems. So the statement of activity is also known as the income statement, or P&L. This is what Robert, walked through last week, where we talk about just the representation of your business model, revenue over expense over a course of a fiscal year, whether that be the year, the quarter, or some other time interval. The balance sheet, which is where our focus will be today, is where we have this really unique snapshot in time. And, judging from the responses that you all shared, in terms of many of you have some familiarity and are using some level of metrics, to assess. And so whether you're coming into, like the balance sheet conversation newly, or not, I think like this will just help kind of like refresh just kind of like the 2 or 3 places, that we would, that we tend to look at NFF. The balance sheet reveals a lot of the financial decisions that we've made over time, the circumstances that may have been surrounding us, and just how much risk we have. It's just really the true position of a nonprofit, at a particular time. All the other statements flow into this balance sheet. And so just for starters today, for those of you who are new, the balance sheet is really about that summary of what your organization owns in terms of assets, what they owe in terms of liabilities, and the net result. And so this reflects the overall financial position of an organization. As I said, it really reflects the accumulated results, or the impact of circumstances and decisions that the organization has gone through. And why do we care about this? It's that it demonstrates the capital structure and clarifies the resources that we have at any given point in time to support our programs and operations. And so in a lot of ways, it is this really unique place that we can assess how much risk can we actually take on, and what kind of cushion or safety net do we have if we wanted to pursue new opportunities. Just to take this, at a slightly different lens, I think whereas we talk about the business model as a tally of activity that happens over time, more like a moving picture, as I said, the capital structure or balance sheet is really that snapshot of the overall financial health. And it happens on a particular point of the year. Oftentimes, if we're looking at historical data, it's that last day of the fiscal year. Internal reports, it may be that last day of the month when you close your books. And so again, we're trying to understand, what are the kind of resources that we have access to so that we can pursue artistic vision, mission, Capitalization gets talked about, and the term gets thrown around, quite a bit. I think it often connotes or just like brings up, things like the purchase of a building or building a facility or an endowment, that has permanent restrictions. And so all these things are, are perfectly valid, elements of capitalization. And to really do it well, it's about understanding and planning for having available cash, the stuff that's actually flexible, that does not have strings attached, it's not tied up in a facility or a permanently restricted endowment, so that when our organization needs it to either respond to risk or to innovate or just manage or respond to the unexpected, that we're able to do that. And so again, the composition is found in just the items on the balance sheets, the stuff that, beyond the P&L statement that Robert talked about last week. And it's a long-term view. It's something that doesn't happen overnight. And it can feel overwhelming to think about, things like a long-term raise, or just sustaining the organization over time. And so we do hope to just begin to unpack like what some of those steps may mean. Just giving you a couple of examples, and we will launch a poll, at the end of this slide. But I think we have a way of just like thinking that even when you don't necessarily dissect the balance sheet, you may feel like the symptoms of capital structure that is either under, capitalized or miscapitalized. And so when an organization is, truly feeling like the effects of not having enough resources, it can often feel like this visual that's on the left-hand side here. Yeah, I'll put a period there. There's so much more that we could possibly say, but I'll put a period there. This second photo is a different kind of capital structure, where things may actually be misaligned. So if you've heard the term miscapitalized nonprofits, that it's not necessarily the lack of resources, but perhaps not having the ideal mix of resources that is actually useful, and helpful to deliver mission and strategy. I'm working with an organization now, where they've just outgrown, like have had a facility over time. And the program delivery is really not about place-based programs, more kind of like bringing programs and services out into community. And so they have a rather large balance sheet, and it's not really aligned, for the purpose or needs that their programs have. And so what might be a more ideal situation, I know that, the visual is, it's a little trite, here, but it's going to be that instance where it feels like we've got, exactly the right mix. Right mix is perfectly aligned. And, we're neither kind of like tipping the truck over, nor do we have, more house or equipment than we need. And so I would just ask, just to get a sense, and if Michael, if you wouldn't mind launching the next poll, it would be helpful, just to understand which image, like where are folks at in terms of what feels like your current capital structure, whether or not you have analyzed your balance sheet. And so this is more of a feeling question, but I think there's often a connection to the actual numbers. Okay. I'll just give folks about 10 seconds or so just to allow that time to come in. And so we do have a pretty good critical mass here. And so it's really interesting. So we have about, a third of you who are, let me just see if I can share. And yes, that a third of you, are kind of like feeling like sort of in the undercapitalized category. Another third of you in that miscapitalized. And then, really encouraged to see that 44% of you are putting yourselves in that well-capitalized category. And so, just understanding like, that that is more based on kind of like feeling, and we haven't gotten into the numbers, that typically does show up, in the numbers. So I will just close this. So thank you for allowing me to have a sense of where folks are. Um, so I think what we'd like to do now that we've sort of pulled and got a sense of the room, I'm going to ask, if you feel comfortable, for folks to just, imagine what that, for those of you who reported yourselves in that well capitalized category, how do you describe what that looks and feels like? And just asking, just for a couple of characteristics or examples of what does that mean for you? What does it feel like? What are some of the operating characteristics? Sure. Okay, yeah. Yeah, thanks, John. So talking about having enough reserves so that we have confidence in sticking to our budget. Yeah, that I mean that is a big part, so that there isn't, not just like that kind of like immediate, ability to pay for expenses, but that you've got like some safety net, or cushion. I'm not seeing any other additions in the chat. We have clients that have described this, and I'll offer just that it has, very much like as John is describing, like having enough reserves, so that we've got confidence that we can actually carry out our budget. So it's very much attached to like not being worried about risk, so that when the things that we're not anticipating, actually break or the equipment breaks, we can handle the repairs and replacement. We've got a plan for debt, but that we're excited not just by what we're planning to do programmatically, but also being able to seek opportunities. So that has been, another way that folks have described it, for us. Yeah. Oh, and Ellen, thank you. Just being able to do much more and not being disappointed because we can't always achieve our goals. Yeah, no, I think that that's a really big part, of where like the actual implications in program and like the work that we're doing, like where that shows up, when our balance sheets are fully supported. Great. Thank you. And so much of, what we're talking about is really just having the resources that we need to deliver on mission. And so whether that's about having the right amount of building and or cash reserves, and or cushion, perhaps like access to a line of credit, that at the end of the day, that we feel confident, to actually implement on program. And so knowing that, several of you are already in the process, of reviewing your balance sheet, for those of us, who are trying to understand, well, where would we start? If we kind of, take a look at the, by the end of this session and see places that we want, to either build more strength. There's a couple of things. First is that we would start with the business model. And so just, walking through kind of like some of the assessment of last week, and being able to identify where is the risk in our actual model, because that's going to be, the piece that really contributes to our overall capitalization. So the business model can kick off, additional, reserves and or cushion, that it's helpful to understand, where are we starting from, and just understanding what are the kind of goals that we want to set. Um, so, so we're just going to spend a few moments just, for those who are new, and I'll kind of like walk through this briskly, but just, just by way of just like crash course into how we actually, kind of walk through the balance sheet. This is a bit of a cheat sheet. It's at the top level, where we want to know what is our position of strength and weakness. What does it look like? What we want to know, what could we afford in the event of a deficit? And where can we dissect the balance sheet to assess this? And so if we're going to just kind of take it one click at a time, just to look one level deeper. The components, from kind of like top to bottom, is that each of the items on the balance sheet is, at the end of the day, requires some management, and they have implications for the business model. So assets, left-hand side, everything that the organization owns in terms of cash that's in the bank. Receivables, are those revenues that we've actually delivered, on that revenue, and so that we're owed, a certain amount of cash. It may not have shown up as cash yet, but we've actually kind of counted that revenue for that year. And property and equipment, certainly any kind of like facilities, equipment, furniture and equipment will be in here. Um, and then on the on the right hand side, we have liabilities. And so those are kind of like items that anything that the organization owes to others. And so some questions here will be about just how are we using our payables, debt, to actually respond to cash flow needs, and any kind of like financial hardships. And then the net worth, it's not too different from personal finance, right? We've kind of like got like own what we own up here, versus what we owe. And then this net asset section, there's a lot of detail in here, but we'll talk a little bit about, what are the components. So the biggest difference, between, this and personal finance is that whereas this net worth number would ideally give me like a pretty good number of how much safety net, I have to actually respond, or to sort of like absorb changes or risk. In our sector, we have a lot of different kind of like restrictive components on our money. And so understanding like which categories that net worth sits in is, becomes really, really critical. And so to go in one level deeper, what organizations have, I mean, the question that we're really trying to understand is there enough, of what our organization needs? I know it seems like sort of like a really simple, a ridiculously kind of like simplified question, but from top to bottom, we are trying to understand what's the balance between the things that are easily available as cash. So the higher you are on this list, the more easy it is to convert these components that exist on your asset, on the asset side of your balance sheet into cash. So this is, again, kind of like cash that is currently in the bank. Accounts receivable. It also includes, those receivables that may be in the form of grants that are pledged or promised to us, but we've just not received yet. What an organization has invested in terms of long-term investments, we certainly want to understand how, not just like how much and the size of that investment, but what's again is like the part that is not tied up in restrictions. Oh, and Cheyenne is asking just a question about balance sheet descriptions. What other expectations from this session is that in just a moment, we're going to talk about the specific metrics and characteristics to take away in looking at the actual numbers, as we're working through this content. And so hope that helps, Cheyenne. And again, just to finish like this walkthrough, liabilities, just the things that we owe in terms of payables, it's short term, how are we managing debt, oftentimes for cash flow purposes. And then net assets, that we'll hold on until we get into the calculations, will be the categories that you're seeing, down below. And so one of the first things, that we advise when you're looking at your balance sheet, even before we get into the metrics, is to understand what's the largest number of the balance sheet. And one of the reasons that we do this is that I think that it will often tell us, one of the key operating implications for your organization, whether that number occurs on the asset or the liability side. And so just, to kind of illustrate this point, just to explain this graph, and we do this graphically just to, I think to kind of accelerate, sort of like the takeaway here. But this graph shows the asset side for 3 different organizations, and we normalized for size so that you could see each category as a percentage of total assets. The most common characteristic that you can see here is property, plant, and equipment. And so given the types of asset compositions that they have, I would ask this group, what do you think it says about their core driver or the way that they fulfill their mission? I know we can see the kind of like the names of the actual, kind of like sector type, but anything, that kind of jumps out at you in terms of what's core to the way that they fulfill their mission. Let's give folks about just a few seconds there. Yeah, Joseph is highlighting, exactly that there is a need for building or place to work from, or at least for the group to come together. Yeah, thank you for that. And Veronica, just the need to kind of convene, bring people to a specific location and place. And so one interpretation, and thank you, Joseph and Veronica, just that I think the additional interpretation is that the driving force of their program and mission, it is aimed towards selling or filling a seat or a bed, or kind of like a slot. And so the largest asset being property and equipment. One interpretation is that they're in the business of selling seats or tickets or slots, bringing people to a specific location, as a couple of you have added in the comments. And then what it means operationally is that we then have like a financial responsibility and burden to take care of and keep up with that property and equipment need for that cedar bed. And so just one other example, just to, like make the point that there are a lot of different types of, compositions, for example, that in this particular case, there's neither kind of like one prevailing asset driver, some combination of cash and receivables. But this business model, is more about deploying people into the community. So people, who are, who are out either delivering like touring, like kind of like arts and culture kind of programming. This was a visiting nurse, kind of program in the middle workforce. So, whereas the previous one was about bringing people to a specific place, this one is more about deploying people. And so having that kind of like flexible ability to really, get paid, pay your expenses, as you're delivering, in terms of short-term liabilities, not as, as sort of like obvious, from the previous example, but just a helpful kind of like first step to just take a look at just your asset composition, telling you just something about the operational implications. It is also possible to have the same mission but different asset compositions. And this was actually a client that we had, YWCA, 4 different models for different geographies, some serving kind of like higher income versus communities that required subsidy. So I won't spend much time here, but just to make the point that, like this first one, they had kind of like a driving asset in investments, which on first glance, seems like a really strong, characteristic. But when we looked at, the fact that this was a permanently restricted endowment, or the type of investment, where they could not access the corpus and really just the investment income that was being spun off, it really, required them to really look much more deeply into their liquidity needs. The other one I'll point out here is just this one on the far right, where they were dealing with more kind of like subsidized payments from the government, and so this receivables, it really just meant that they had operationally the need to have fiscal staff and staff that was really good at collecting on those receivables, meeting the compliance of those government requirements. So just, didn't want to belabor the point, but just to say that that is one helpful starting point, to understand like what's the largest driver on your asset, composition, your liability composition. And then from there, we want to know how much resources an organization has on hand, again, to adapt and respond to risk. And these are the kind of characteristics that's indicative of just higher capacity for risk or change. Having sort of like that availability of cash, receivables, that we know we can manage, and collect on. If we have, a line of credit, that there is some level of accessibility and availability that happens over the course of the year. But, similar to, some of, what a couple of you have commented, just having having space. And Pilar, yes, space having important referencing that that kind of property intensive kind of balance sheet. What we would see on the liability side, may, also show up in terms of kind of like the kind of upkeep, maintenance, if there are sort of like payments and costs, that we're not paying, immediately, may actually show up in, in the form of liabilities, or short-term payables. And so what we wanted to do is, in addition to looking kind of like the composition and just, a general gut check on, do these things, like where are we, like when we think about our own organization. The next step we want to talk about is really about how to assess liquidity and just the available balance sheet resources that we can actually get to, if we really needed to access cash. And so in this next section, we're just going to talk a little bit about just what we mean by liquidity. There are a number of different metrics that you can run. And we tend to focus on just a small handful because we find that it is a helpful starting point, for how to quickly assess where our organization is. For those of us who are helped along with sort of like the conceptual and where all of this fits, this visual illustration, it picks up, on the first part of our session last week. And these net assets, so this is basically kind of like a pictorial version of the balance sheet, architecture that I had just walked through. And similar, we can kind of view this bucket, of water as representative of the size of our net assets or net worth without restrictions. It's where we can see, just like in this visual, the drivers of how we either build this bucket up, or spend it down, has a lot to do with how much we're actually bringing in terms of earned and contributed revenue that year, and how much we're having to pull out, to actually spend on expenses. And so we analyze how strong an organization's balance sheet. We are getting into this level of complexity and trying to ascertain like what's really inside this bucket. And even within this net assets without restriction bucket, there are a lot of things, that show up on our balance sheet that are not actually free and clear for operations and, for immediate use. And so we'll look at kind of an example, in numbers in just a moment, but just pictorially, this, oftentimes what could be sitting in this bucket, are bricks, so that's just trying to demonstrate, what we were looking at in terms of property and equipment, in the example earlier. It's sitting in the bucket. It may have a lot to do with why the water level is as high as it is, but we're not really in a position, to sell that building to cover expenses, at least on an ongoing basis. So certainly it's part of kind of like the number and what makes up our net assets number, but not really a place, that we can access real cash. The second thing that we'll point out is that there is also kind of like ice that's in here. So unlike kind of like the stuff that we're really needing in terms of like the liquid water to pay expenses, similar to the bricks, the ice, it is the next best thing to cash, and they're easily converted to cash, but there is a certain amount of timing that we have to consider, just in terms of like how quickly we could convert those receivables into cash. And then lastly, the bottle of water that's here, if a board imposes restrictions on any part of our unrestricted net worth, these can serve really similar to an endowment. And it provides us a lot of flexibility because it is internally controlled. So for those of us who have the benefit of having excess kind of like liquid, like net worth here, some of our boards are taking a really important step to put a bottle around that reserve. We can open and close, depending on kind of like the purpose and the policy that's surrounding that particular reserve. But it's really important to separate it out, because it's, still within the jurisdiction of the board. So all of this to say that, the point of going through this is just to just to highlight again, just like unpacking the balance sheet, I think on first glance, it can be difficult, if we're not, quite clear about the pieces that we can pull apart. And I'm just noticing a couple. Yeah, we've got a great question from Ellen that says, "What if you have a nonprofit with no property or physical assets? Is that a negative thing?" And the answer is, I mean, no, not on the face of it at all. In fact, it really depends, on the business model, how the organization meets its mission. And I will say, for NFF, we have a very specific point of view, and so I just wanted to put, our kind of bias out there. But for all of the benefits that come with buildings, it it does introduce new risk to an organization. And so I think just understanding that trade-off is a point of due diligence that that we really emphasize. But it's a really fantastic question, and I think just from this visual, the "it depends" response has a lot to do with what are the goals with that organization. It could be perfectly okay, to have bricks in this bucket, but if they have no excess reserve, or liquid cash to maintain what's really needed in the care and feeding of that building, I mean, that's where we start to find, organizations really challenged, if they're not kind of like anticipating what it means, to change the composition of assets. And I'm seeing another question from Ellen, and thank you. It's just like, is a balance sheet helpful to a business that's on a cash basis? That's a fantastic question. And so I think the answer is yes, just in that even if you are running on a cash basis, it's always helpful to understand at a point in time, like how you're trending. And so I would say that, if you are running on a cash basis where you have the ability to really look at your profit and loss and really understand like what's cash, what's not cash, that it's still really helpful, to, just to know like what, especially like when I'm thinking from like this perspective of external stakeholders, that just being clear on what the story of that balance sheet is, alongside, any other financial reports. That would be another point I would lift up there. Next session, actually, we will be getting into cash flow planning, which is sort of like the companion, to this session. Just in that, if we find that, by the time we get to the end of these liquidity indicators, that we do want to either improve where our cash situation is, what are some of the steps? And so I think mapping out what that looks like over the course of the year is one place, or one important step. Just taking a quick look. And thank you, for all of the continued questions and comments. And so let's go ahead and dive a little bit deeper into just what do we mean, like when we're dissecting and really analyzing what's sitting inside that bucket. As I said, there are a lot of different indicators that we could analyze and run. At NFF, we tend to look at two, so there's months of cash, and that really just allows us to take a look at any given point in time, how large is my cash balance relative to the monthly expenses that my organization is likely to incur. So that's one. I think the other one that we focus on is something that's called, and it's an unfortunate mouthful, available net assets, and short for I think the acronym that's a little bit easier to say is like ANA, ANA. And that gives us a slightly different view of our liquidity because it takes into account just the cash that may actually be spoken for. So whereas this first metric up here, it's calculated based on looking at your cash balance, and for this particular example, let's say the year end, and then seeing how large that is relative to our average monthly expenses. It's a great starting point, but if we have a lot of restricted cash that is inside of that number, looking at the available net assets and running the same calculation, but going to the net worth numbers, so that we can really parse those, or pull apart the pieces that are with and without restrictions, is a slightly different view. Yeah, this is a great question that's just come in that says, are we including non-cash expense such as bad debt, depreciation, in-kind pass-through, et cetera, as part of the calculation and total expenses? And so there's one item in here that's we would have to look at the specific context, of your organization, but on face value, we would want to see kind of like the cash expenses, just to be kind of like purely looking at like how much cash do we really have to put out. And if bad debt, depreciation, all of these items are kind of non-cash items, it is helpful, just to kind of run that calculation purely based on cash. I have worked with organizations that have found it helpful to include a couple of these, pass through being one of them. That even if you're in, the sort of situation or model where you are re-granting, so it's literally you're getting, like cash in to re-grant out. That I've had a couple of organizations that we've worked with that are dealing with timing differences between when they actually get the cash, when they pay it out. So I think the specific context there was that it was helpful for them to run the calculation with both cash and non-cash items, just to get a sense of the range, and to understand if there were big differences, wanting to understand why. And so here's just a sample balance sheet. And so I think just for the purposes of just like walking it through, for those of you who have not walked through the calculation again, this is the organization that Robert started us on last week when we looked at the income statement. And, just to, very kind of like more like march through like the calculation, to match numbers, into where we would calculate. And as I said, like we're looking for average monthly. It's an average. And so I think that there are instances when a group may want to change the time period, if they're finding kind of lumpiness, or wanting to look at a specific part of their upcoming year. But for the purposes of just understanding, like initially, what is my initial cash reserve that I have available? When we run this calculation, what we can see is that they're operating with about a month and a half, or 6 weeks worth of expenses, so that if no other revenue came in, that they knew that their sort of like space was really about kind of like 6 weeks. We do this calculation again from months of available net assets. And so on that previous slide with so we're just going to grab, the kind of like this line item down here without restrictions. And there's a couple of things that we do to really back out any parts that are bricks, or the property and equipment portion, so that we know what we're really kind of like holding in terms of real liquid net worth. And so after we do that, and again, kind of like compare it to how many months of expenses could this cover, what you see is that the organization, on that basis is in a much more difficult position. And so the value in doing both is that we can see, just like on pure cash, you have a runway of about 4 to 6 weeks. And this one allows us to take a much more conservative view, so that if all kind of sort of like kind of like if we're really meeting the restrictions of what's sitting inside, all of restricted dollars, and then really taking into account the net worth of the organization after they've kind of paid, like all of their debts free and clear, it allows us just to see that, that they are running with with virtually no safety net. And so what to do, about, that kind of hard situation is that first understanding like where we fit, like on just kind of like an operational spectrum. There's no right amount, of liquidity. And what we have here is just a starting point for what it may actually start to feel like when we do run the calculation and we're, kind of like below that 3 months, of expenses. And this is really a point, that we've been taking into the field, philanthropic field, in particular. It used to be that we would present this slide, and it would be, very much a theoretical, exercise, that talked about how much cash on hand does an organization have 6 months, 3 months, and being on this side of the pandemic, where we did see, very real differences, between how organizations were, for better or for worse, able to survive and keep their doors open. That this is actually a point, within that accessible insights, that we're taking further into the grant making field. And so know that that's a longer term conversation for sure. But I think the other point I wanted to make on this is that sometimes when we are sharing our financial reports to the outside world, it is helpful to get clear on if we may appear, to have 3 to 6 months, actually, if a lot of that is tied up in restricted cash, then we need to tell that story, as part of any kind of request for support, or kind of a request for resources that we need. So that's one part of it, and certainly the other part is just like from a management standpoint, and we've talked, about a number of these already, but this is a bit of like a cheat sheet of sorts, for questions that we at NFF, are typically looking for, when we're working with the group. Not to say that it is evaluative, but really that, how do we, from this point, begin to build into our budget areas that, if we want to build reserves, and or greater liquidity. This is a bit of a preview, into a session that we will, actually dive much more deeply into what are those full cost items beyond reserves, and liquidity. And so this is just, a place to kind of, just prompt if our budget is really about operating expenses currently and the things that we pay for cash, um, uh, as one of the questions came in, about what's, cash, what's non-cash, that it is really important to begin the process for building liquidity, even though it feels like a long-term effort, to do that first step of, having that line item contribution to reserves, even if it's incremental and slow. And so I would offer that, for those of you who want to explore other areas of full cost, that was not the focus of today, that there will be a session later in this series. But we do talk about liquidity and liquidity goals, being not kind of like a one size fits all for every organization, but really sitting with, what do the metrics look like, for my organization, and what are the goals that we have for this upcoming year. If we need, more space, then there are conversations to be had with board members, with stakeholders, funders about how do we identify next steps. But the first part, is being able to communicate kind of like where are we at right now. And so I was just looking at the chat. I don't believe that I've missed any questions, although Michael, keep me honest if I have in this kind of like final couple of minutes. We recognize this is a lot of information, to take in an hour, and sort of balancing kind of like where folks are at in terms of familiarity and work with the budget. But I'll just take just a few seconds, certainly encourage you to either share, or just reflect, individually, just kind of like how we're leaving you in terms of head, heart, and feet, things that you've learned, from today. Is there one thing, that you'd like to express in terms of how the session is making you feel, or actions, that you would like to take back? So I'll just leave it there for just a moment for folks to reflect. Okay. I don't see any additions in the chat, or in the Q&A, although, but I appreciate that, Lily, and just and you're talking about just bringing back two metrics highlighted today, certainly a really important starting point. So thank you for sharing that. Okay, so for others, we hope that this session has been a helpful starting point in looking at the balance sheet. Next week, certainly we'll be, picking up, the thread, again, and for those who want to look specifically at how do we start to project out like our liquidity needs and looking at cash flow as one specific tool, towards answering that question. And with that, I will turn it back to Michael.
Okay, thank you, Christine. And we'll be quick right here because it is 2 o'clock. First of all, I wanted to say thank you, Christine and NFF, for this session. Cheyenne has indicated that cash flow planning and how to register for that. Also, this Thursday, we're having our final session in our legal issues, and it's specifically about having your employees working from home. Even if your employees aren't going to be returning to the office full time, there's been additional insurance and protection things that have come up. And so with the Arts and Business Council on Thursday, we're having an employment lawyer who's joining us for that session, who's also going to be talking about the legality of mandating versus recommending vaccines as employees come back into the workplace, and also security of having your information accessed in an employee's home. Part of that is also workman's comp issues and a bunch of other fun topics. So if you want to join us for that on Thursday, it's at 2 o'clock, and we'll be happy to see you then. Otherwise, thank you so much for joining, and we'll see each other soon at the next webinar. Thank you.